Today we have Ryan from TrueFi, and as always, Sherry from Blue Jay. And today we'll be talking about institutional borrowing on chain and on chain credit scoring. And welcome, Ryan. Ryan, would you like to introduce yourself and what does TrueFi do?
Yeah, happy to. So my name is Ryan Rodenbach. I lead business development here at TrueFi. TrueFi is an on-chain credit protocol where we have done about $1.7 billion of originations of uncollateralized loans. For anyone in the audience who's not familiar, compared to the wonderful compound Aves of the world, TrueFi's loans are done without collateral. One of the ways we're able to do this is by only working with institutions as borrowers today. So historically, our large market has been lending to crypto native trading firms. So the Alameda, Wintermute, Amber Groups of the world, folks like that. And more recently, we've started expanding into this quote unquote real world asset lending market. And so we've launched some things with portfolio managers that are doing emerging market credit, home mortgages, and we're looking at some other verticals as well, including very traditional things like banks, small business receivables in the United States, and a whole list of things. So hope that was a useful introduction.
Yes. Thank you very much, Ryan. And Sherry, would you like to introduce to those from TrueFi's community on what Blue Jay does?
Yeah, sure. So, hi, I'm Sherry, one of the co-founders of Blue Jay Finance. We are a protocol that's focused on creating stablecoins for non-USD currencies, focusing on the Asia markets. So we'll be creating a Singapore dollar stablecoin first, and then spreading to the rest of Asia in our roadmap. So that's Blue Jay.
Nice. And for those who are here, just one last reminder, kindly can retweet the space and get your friends on. And if you guys have any questions, just request to speak towards the end. I'll let you guys know when I'm running out of questions. But let's get on with TrueFi. Ryan, I guess more personally for you, how do you get into crypto? And what got you to join Trust Token back in 2018?
Okay. You want the long answer or the short answer?
Let's do short first, then long.
All right, I'll do the short answer. Was in college, studying finance, like everybody, planned to go into investment banking. Had an internship with a just complete a-hole of a boss. And I talked to enough people that did banking full time to understand that was the status quo. Realized I didn't want to do that. Started looking at other careers, fell down the crypto rabbit hole, and never looked back. How I wound up at Trust Token was that, and just to clarify for the audience, TrueFi is the protocol, Trust Token is like the labs entity. But we weren't actually always working on TrueFi. Prior to this, we were working broadly on the tokenization of real-world assets. And our thesis was that you'd get started in currencies, move into, which are a very fungible asset, right? $1 is $1 for the most part. Move into less fungible things like commodities, where one bar of gold might not be exactly equivalent to another bar of gold based on the quality and stuff. And then eventually move into very non-fungible things. But when I say non-fungible, I'm not talking about JPEGs, I'm talking more like commercial real estate. And the short answer was that while we were working on these different tokenized assets, there was strong product market fit for dollar-denominated stablecoins, and our stablecoin was called TUSD. There was less demand at the time for other tokenized currencies, and we can come back to that later, of course. And then at the time, there certainly was no demand for commodities and for like tokenized real estate. And coming into kind of the 2020 year, we started to see the number one use case for our stablecoin no longer be exchanges like Binance, but rather start to be decentralized protocols, whether that was Aave back when it was still ETHLend, iEarn/YEarn, Curve, things like that. And that's really what kind of led us to TrueFi. So that was the medium length answer, but that was actually the best one. my extended answer includes my original crypto story with the Silk Road, but I'll omit that since we're recording the space.
Okay. I was actually if you don't mind just sharing a bit of that. Like I know it's a bit off topic, but I saw that I took a look at your profile on LinkedIn and realized you're the fourth hire in TrueFi. I think that's very early. And what informed you to join the company?
So before I worked right out of college, my first job was actually at a venture capital firm, and it was a traditional venture capital firm, so not crypto specific. But I had joined as like the crypto analyst, and at that time, as I was digging into a lot of emerging use cases in crypto, I had actually spent some time talking to a hedge fund manager, and he, owned like a bunch of Bitcoin in his family office. And this guy also owned a gold mine in California. And he was looking into how he could tokenize this gold mine and sell off rights to it and things like that. And that was actually the first time, so this is summer of 2017, that I came across this idea of tokenization of real world assets. And having had experience prior to that where I wanted to buy something in crypto and just thought it was ridiculous to pay in Bitcoin, which is this fluctuating currency, the whole idea around tokenization of assets and specifically tokenized currencies, which is basically just stable coins, was an idea that really stuck with me as being impactful and something that could drive this kind of differentiated mainstream adoption.
Okay.
So,
Thank you.
I guess, yeah, the short answer is there is I basically had a thesis around tokenization of real world assets. And when I met the Trust Token guys, they were very much focused on that.
Yeah, nice. Okay, yeah, let's get more towards TrueFi then, more towards like the basics. Let's say if like I'm a retail investor, how do I go about providing my capital to the various portfolios on TrueFi? Hello? Can you hear me, Ryan?
Oh, yep. Sorry.
Wait, did you catch the question?
Yes, I did. I just didn't realize I was talking into a muted mic.
Okay. Oh, yeah. No worries. I thought my mic had issues, but yeah, all good.
Today, the most common flow of how to interact with TrueFi would be to go to our website, app.truefi.io, and you'll see that at the top of the page, we have our 4 crypto-focused lending pools. And so these are denominated in USDC, Tether, TUSD, and BUSD, Binance Stablecoin. And if you deposit into those, today the interest rates are somewhere between 9 and 18%. And that is giving you diversified exposure to a number of crypto trading firms. In the smaller pools, it might just be 4 or 5 firms. In the larger pools, it might be upwards of 10. And you start earning interest immediately. So from the kind of technical perspective, it's very similar to when you put money into Compound and you get back an LP token and the value goes up over time, assuming no negative events. So that's the short answer of how you interact today. I would note that the majority of our lending volume today, the majority of our LPs today are institutions. I think something like 80 or 90% plus of our total deposits are like $1 million plus. So it's definitely more weighted on the kind of high net worth institutional side. But regardless, anyone can come into one of those pools today. And then we have a kind of separate flow, which is what we call portfolios. And so these are where we're doing some of the real world asset type lending. And since the real world asset originators tend to require more duration capital, if you went to our website today and you looked at like the CAURIS portfolio, CAURIS, I believe a lender has to lock up their funds for 3 or 6 months. I forget the exact duration. So there's a little bit of kind of detail there to click into and explore, but those are some of the different options today.
Nice. All right, and on that note, how does you guys really originated $1.7 billion of loans? That's really impressive. How does TrueFi ensure the creditworthiness of the various institutions lending, other than the fact that they are big names?
Yeah, so the short answer is that it depends. Each pool or portfolio will have its own underwriter, or as we call them, portfolio manager. That individual or institution is responsible for underwriting the borrowers in that pool. So in terms of our crypto lending activities, the majority of that has actually been done by a credit team that we built out for that function specifically. And that's who's originated the majority of that 1.7. But then in terms of some of these third-party pools where we have no association really, they're completely independent, completely third party, those are different institutions that tend to have an expertise in some type of credit, whether that's small business receivables, emerging market debt, bank lending, etc. They come on and they're using TrueFi as a piece of infrastructure. But the process for them of underwriting their borrowers, understanding the counterparties, understanding the risks, setting rates, that's completely up to them. Same type of activities that you would see in a kind of traditional debt fund. And then the thing that we're really excited about is, I think historically when people have thought about TrueFi, they've really thought of it with respect to these core crypto lending pools that we have. But the place we're getting to is that TrueFi is really just infrastructure that any originator can use for the funding, origination, deployment, and repayment of loans. And today, there's certainly a lot of inefficiencies with crypto and blockchain rails, but we hope to get to a point where TrueFi is actually a superior architecture and infrastructure choice for anyone looking to manage credit of any kind. So sorry for the long answer. I tend to do that, but
no, it's great. I love the long answers. And I also realized some of the portfolios, when we try to borrow money to them, we need to KYC to participate in them. Why is that?
Yes, that is a great question. So I'll give you a two-part answer. Actually, I'll give you a one-part answer, just because I talk too much.
It's good. It's good.
The reason for that is that our different portfolio managers have different requirements. One of the portfolio managers who we're onboarding but hasn't gone live yet, they're called Procession Capital. If you actually go to forum.truefi.io, they have a post in there. You can read about them. They're an SEC registered hedge fund in the US. And so they're going to have a different set of restrictions in terms of what kind of lender capital they can accept. And so what we're finding today, just based on some of the regulatory uncertainty in the US, is that most of our portfolio managers want their lenders to be KYC'd, and specifically, they do not want to work with US-based lenders. So sorry to any US-based folks in the chat, of which I am one. But yeah, so it's really just kind of case by case, depend on what the manager wants and needs.
Okay, I see. And now that you guys are expanding into real-world asset lending, how do you guys differentiate yourselves from the other real-world asset lending protocols?
It is a great question. I would say today, taking a step back from real-world assets specifically, today, if you were to look at the quote-unquote credit lending markets within crypto, I break it up into three verticals. Vertical one is lending to crypto trading firms. Vertical two is quote-unquote real-world assets, which is the most broad, all-encompassing term ever. And if someone has a rebrand, definitely let me know. Bucket three then is like this emerging use case of lending to DAOs. Bucket one is where we started, lending to crypto firms. And across all three of those categories I've just mentioned, it counts for only about a total of $3.5 billion worth of originations. And I think 3.3 billion of that 3.5 comes from the first category. And that's predominantly across TrueFi and Maple, where we've each done about 1.7. In terms of that second bucket, then, in terms of this real world asset lending, even though I think most people would agree that that's the biggest bucket going forward, today that bucket has only done maybe $200 million worth of total originations. So in the grand scheme, that is so early and really still a ripe market. How we're thinking about differentiation is that we're hoping that our track record of both on the smart contract side, on the credit side, on the relationship side, from originating so many loans to crypto trading firms, that we'll be able to leverage that when we're trying to break into this real world asset category, which, again, even though we haven't done many loans in that category yet, as we started to express our intention of moving there, we've gotten a lot of inbound from different managers who have seen the work we've done in the past and are excited to work with us based on that. And then just to give a little shout out to that third bucket of lending to DAOs, that one is a super new bucket. Really the only two kind of firms dedicated to that space, one called Porter Finance, which actually shut down recently, and then another one called Debt DAO, which I'm involved in. But yeah.
Nice. Oh yeah, Sherry, go ahead.
Yeah, I have a lot of questions, Ryan. I know we've spoken before, but I feel like every time I hear more about what you're working on, I just have more I'm curious about. So the third part about DAO lending, right? Like one of the things that is a bit of a challenge to figure out is basically what is the right risk reward profile for that kind of end user, because a lot of DAOs frankly are either quite new and maybe there isn't like even an incorporation structure where you can underwrite, let's say, to an opco, for example, or there's like a non-anon trusted team behind they can maybe KYC, or like maybe there isn't like a recurring revenue model that you can underwrite that loan with. So I'm just wondering, like, how big do you think that universe is for DAOs, and how do you think this is going to grow? And if this is the place to grow versus real world assets, which are more off-chain to on-chain than on-chain native organizations. Yeah, I wanted to just get your thoughts there.
Great question. And so taking a step back to my kind of three buckets, right? Clearly today, the number one bucket is lending to crypto firms. That's 3.3 billion in originations. Number two is real world assets. That's roughly 200 million in originations. And let me know if my numbers are off there, if anyone in the chat. That third bucket of lending to DAOs today is like 5 or 10 million total. And that's from the one loan that Porter did with Ribbon. So that is the smallest bucket today. And we're probably not going to, I can say with high certainty, we're not going to touch that bucket directly. We would partner with someone like DebtDAO on that if they wanted us as a funding source, but we're not going to work on that directly. And I think the reason is that my gut sense is that given the crypto nativeness of a DAO, that the protocols partnering with them should really have custom smart contracts for the type of lending that they're doing. And so if you look at how both Porter approached their first set of loans and how DebtDAO is looking to approach their loans, they do it in a much more crypto native way. And I draw that distinction because the kind of credit we've done so far is much more traditional, right? When we are lending to, say, Wintermute, we're the credit manager is doing a very traditional underwriting process where they're looking at their audited financials, they're looking at their balance sheet, so on and so forth. Same with real world assets. And I think DAOs just fall into a different bucket. And if you look at like the approach DebtDAO is taking, which, just small disclosure, I am a small investor, they're basically using a custom smart contract that allows them to do revenue-based financing based off of a DAO's cash flow. And that's like a very crypto native thing that doesn't particularly work with real world assets or crypto lending firms or crypto trading firms. That said, and I know I'm rambling a bit, so feel free to cut me off if you feel so.
No, not at all. Keep going.
Yeah. The other thing just to note there is like that market is brand new. Like DAO treasuries, the whole concept is something that barely existed 3 years ago. And so I think that the underwriting methods will be and feel pretty new. And I think the other subtle point that I've discussed with some of these teams is just like today, there's basically questionable use cases for what DAOs are actually doing, what they're funding. And like, will DAOs be using this for working capital? If so, what's the activity they're doing with this capital that's going to generate like a return that would justify paying off the loan? I think there's just a lot of open questions. Something I'm very excited about, but also certainly very early.
For sure. And on the like real world asset side of things, let's get a little bit more specific, right? I think you mentioned that there's some inbound that you're getting in this space. Who are these guys? Like, are these like fintech credit funds, or are they fintech startups directly, or are they, I don't know, B2B SaaS ones that are reaching out that are perhaps finding this an interesting novel way to get access to capital in a way that is much harder through the traditional institution that maybe not, I don't want to say not tech savvy enough to understand how to underwrite to them, but that's what I'm saying. But I'm just wondering where you're seeing this inbound, how is it being categorized across different verticals?
Great question. And I'd almost try and break this up into two things. So across verticals, it's everything. We see everything from trying to someone that somehow discovered us online and is interested in financing their solar plant in India to not talking to like large traditional financial institutions in the US that see this stuff as like new and novel and they want to figure out how it fits into a sandbox group kind of thing. So the spectrum of people we've talked to is across the board. Now, the distinction I would make is what they come to us looking for. In that first example I gave of the made up Indian solar plant, they're coming to us really just looking for financing and cheap financing at that. And I think any crypto platform doing what we're doing runs into this adverse selection problem where you have people that are just looking for capital and they think it's going to be easy and they're coming to us for that. And so that's the funding bucket. The second bucket, which is the one that we're much more excited about, are firms, and these might be credit funds. So like Chorus, Cauris is a great example of this, where they see the overall benefits of DeFi across the board, whether that's on the funding side, whether that's on the origination side, the cost savings that come with that, so on and so forth. And they want to use TrueFi as a full stack platform. They're not coming to us just looking for the funding element. They're excited about the infrastructure we're building. They're excited about having on-chain, tron-chain, and deterministic waterfall repayments, and all of these different things that smart contracts enable. And so that's really our target customer, if anyone in the audience happens to be listening and it fits that bill. But yeah, so it's really everything from like individual asset people where they want to finance one specific asset all the way over to credit funds and the like.
Gotcha. And then I guess right now, you're probably not going to be able to service all of the inbound requests that are coming in, but like, how are you thinking about serving these in a scalable way? Is there like a certain like minimum loan size that you guys are looking at that would make sense to bring like an individual firm, or not firm in financial sense, but like a company on? Or is the preference still to work through more of these like aggregator types, like the credit funds that can do this or can spread across a bunch of different companies that perhaps represent a vertical like sustainability or agritech, etc.?
So in a perfect world, I think Ryan's personal preference, and I don't know what other people would think, but my personal preference would be to work with more funds that are not the borrower. Like the type of inbound I would love is not the borrower themselves, but the portfolio manager, the person who's actually underwriting the credit, where they're saying, hey, we have this unique strategy of lending to emerging market credit. We've got a bunch of borrowers lined up. We have some capital, and we'd like to raise the rest of the capital in TrueFi. That's my sweet spot of the kind of person that we want reaching out to us. Yeah, that's the sweet spot.
Okay, cool. Now let's talk about the supply side of things. We spent a bit of time on the demand side. What's really important, obviously, is to make sure that with the demand and borrowing, which I'm sure exists a lot, right? There's a huge amount of credit gap that exists in the world, but you need the liquidity on the supply side. As you said, like some of the maybe starting capital might be a bit more crypto native, maybe institutions or people that are, I guess, used to or are already starting to lend to institutions that they know in the crypto space. Now, as you expand, like who are the potential lenders that you are also thinking about bringing onto the platform? And what do you think that they're looking for on TrueFi in comparison to other places they may be parking their funds?
Yeah, great question. And this also ties into your last question as well, because I had a second part to that, which is, so yes, I named that our ideal kind of inbound is from the credit fund type people. That said, really what we're focusing on today is what do our lenders actually want? Because as you see across the board today, and I guess to take another step back, crypto lending markets have a dynamic. Up until all of the Celsius 3-hour Voyager stuff took place over the past month or so, we were really in a borrower's market where borrowers were able to, they had a lot of pricing power. They could set their terms, as we saw in some of the transcripts, they could give limited disclosures, etc. And now we're getting back to a lender's market. And so as we're trying to figure out what the best things are to bring onto TrueFi today, we're having a lot of conversations with our lenders, asking what kind of risk do you want? What are your return thresholds? And actually, we're doing a lot more trying to go out and source interesting opportunities for them. And when we're talking to lenders, it could be everything from the MakerDAOs and Fraxes of the world, where we're trying to get stuff done with them. It's some of our institutional lenders across the board. To talk a little bit more about lenders, I think where we have been historically, and I think that this kind of applies to most of the credit platforms, is that the set of lenders today are mostly crypto native, like they're highly crypto native. And so when they're figuring out where they want to put capital to, they're used to concepts like constantly available liquidity. They're used to a certain return threshold. They're used to things that don't necessarily line up with what investors in the traditional world are looking for and seeking. And so trying to find the balance of serving our customers today, but also trying to bring on opportunities that might appeal to lenders in the future has been an interesting kind of balance to handle. But something we're working on there.
Gotcha. And are you guys thinking at all about enabling maybe a secondary market in case there's like some way for like more quicker liquidity, or I guess a slightly more liquid option for the crypto native users that are a little bit more used to this? And the reference I'm making here is actually to the Goldfinch model, because they actually do enable, I believe, a secondary market. So I'm wondering if that's something you guys are doing or are thinking about with TrueFi, as these real world asset loans do tend to have a higher term duration than what more crypto native loans look like.
Agree with that. And I guess even just to clarify on our side, what we call the DAO pools, right? The ones that have done the lending to crypto firms, those do have a certain degree of liquidity. So when you deposit, you get back an LP token called TFUSDC, and there's a very thinly traded TFUSDC USDC market on Uniswap V3, for example. So that does exist for some of our products. That said, I think what we've seen looking at other secondary markets, and maybe I'd point to something like, Centrifuge that's been doing this for a long time, or some of the other platforms, is that these secondary markets are pretty thinly traded. And so even if it exists, there's not necessarily a bid on the other side if you're trying to sell one of these LP tokens. And so that is a real challenge. And in regards to Goldfinch, I saw their recent proposal in terms of trying to enable a secondary market. I'm curious what their findings from the research they're doing on that will be, because our conversation with some of the portfolio managers is that they actually don't want their LP tokens to be traded. And there's a number of reasons for that. One is, so some of our portfolio managers, as I said, require KYC and non-US. And so if they were going to allow the LP tokens to be tradable, it would need to be on a compliant venue. And so those couldn't be on Uniswap or something like that. In regards to that, we do have a partnership/joint venture with a company called Oasis Pro Markets. They're a registered broker-dealer and alternative trading system in the US. And we're actually looking to make some of our loan opportunities and LP tokens available for exchange there in a compliant way in the US. But I guess that was a long-winded way of saying that allowing for trade of LP tokens is a bit more of a complex topic, just in terms of regulation and liquidity.
Gotcha. And in case, sorry if you didn't get to this already, but if like you are a retail crypto user, let's just say me, wanting to participate in TrueFi's pools, is there actually a current compliant KYC process that I have to go through before I actually can participate?
Yes, and
Okay, gotcha.
I did cover this briefly, but I'll just clarify as well. It depends on the pool. So today, as you click on different pools or portfolios, I believe right on the UI, it'll say this requires KYC and non-US. This requires just KYC. This requires nothing. But as I said, it's completely up to the manager's discretion.
Gotcha. Okay, so basically like which makes sense, but like on both the borrower and lender side, no matter what the size is, there needs to be a compliant KYC process. The trickiness of having the secondary market is as soon as you expose it to a much more permissionless protocol, right? Without the KYC process, you're not actually able to know who's holding the LP tokens at the end of the day.
Wait, Ryan?
Hey, sorry, my Wi-Fi just shut off.
Okay. I was like, okay, no worries.
I caught that. Yeah, what you said was spot on.
Okay, gotcha. Cool. I actually think we have a question from the audience. I'm gonna just pass it to Ben. Please feel free to unmute yourself whenever you're ready to ask your question.
Thanks, Sherry. Hi, Ryan. Lovely to meet you, and thoroughly enjoying listening in on this Twitter Spaces today. I'm Ben Shepherd, one of the co-founders at TrueFi Finance. I've got two questions actually. So the first one is, could you expand on how the due diligence process works on the borrowers? It sounded when you were describing it as though you had maybe a centralized team of credit experts that are reviewing applications that come in, but I didn't quite understand how that whole component works. So if you could expand on that, would be great.
So the medium length answer is that it depends on the product. So for the crypto lending pools, the like USDC one, for example, when we launched that, we did hire some in-house credit experts, and they have underwritten those borrowers to date. If you go to docs.truefi.io and click on the for borrower section, they go into some of the methodology and criteria that they look for there. Now, all of the information you'll find there is specific to the crypto firms, right? The Alamedas, the Wintermutes, the Amber Groups. In terms of if you were going to come onto TrueFi and manage a portfolio of emerging market debt or small business receivables, that manager will outline their own diligence process and what they're looking for in that. And then the lenders will opt in if it's something that they find interesting from a risk return perspective. So if you go to our forum, so forum.truefi.io, and you just do a control F for Procession Capital, they're one of the managers that we're bringing on, and they go into a lot of detail about what their process looks like for underwriting risk. So it just depends on the different pools and portfolios, because this is a very obvious statement, but I'll say it anyway, which is we couldn't apply the same methodology that we do to crypto borrowers to other strategies. So it's totally case by case there.
Cool, thank you. So yeah, that's interesting. In Silta Finance, we're focused on your second bucket of real world infrastructures, specifically sustainability infrastructure like solar farms, wind farms, that kind of thing. And we do due diligence on those sort of projects and then present the scoring of that to TradFi lenders, but also DeFi protocols. So I'm curious how a third party such as us could possibly present the sort of due diligence scoring that we've applied to a particular project and then work with TrueFi on that. Do you have a mechanism to have a third party perform just that role, not as a portfolio manager, but as a third party that does that sort of scoring activity for you, so that the lenders can use that as a way of gauging the risk of investing in a particular pool?
Interesting. And listen, I love doing BD right on the Twitter Spaces. It's very fun. Just based on what you're describing, and I'm a bit familiar with Silta. I think I've seen some of the stuff you've done with Blue Jay, actually. And I guess the short answer is yes. If we had, for example, a portfolio manager who was doing a portfolio focused on sustainability lending, and you got in touch with them and they agreed that the score you provided was useful, I'm sure they'd love to take that into account. But actually, I think the thing you're describing is that you sound like a portfolio manager in terms that you're underwriting the risk and providing a scoring or ranking for the borrower. Ideally, you could break out a return from that as well. Yeah, I think it actually kind of is the role of PM.
Okay, we can take that offline and discuss it further if you like.
Yeah.
Just one other question. How would a default event work in your loan pools? What recourse, if any, do the lenders have? How is it completely covered off by the portfolio manager, or do they have recourse to the original borrower behind the portfolio manager?
So I'll give you the very general answer, though I should note that different pools and portfolios use different MLAs and have different structures. In general, though, the portfolio manager sits as the legal counterparty between the lenders and the borrowers. And the portfolio manager would be responsible for pursuing a borrower in the case of a default. In the short term, though, if you are participating in one of the pools that are doing the crypto lending, we have a staking module where stakers stand to be slashed up to 10% of their stake in order to cover a default and make lenders whole. And we're looking at some other mechanisms as well, because just that doesn't necessarily scale with the growth of our pools. And so I guess that's something I'll throw out to the chat, is that if anyone has great ideas around a kind of insurance mechanism, we'd love to discuss that. But the short is that the portfolio managers would be responsible for going after the borrower in recourse.
Okay, I think I understand the role of your portfolio manager a bit better now.
Great.
I had an idea of what it meant, but yeah, it's starting to click into my head. So yeah, thanks, Ryan. That's really helpful. Great project. Love it.
Thank you very much.
I have some questions to follow up as you guys were speaking, but I was wondering about what happens with the loan after it's actually launched and some of the disbursements are made, interest payments are made. Is there any possibility of ever refinancing the loan? Is that something that the portfolio managers actually have at their disposal to do? And is there a process where there needs to be a vote with TrueFi or some kind of process with TrueFi to determine whether or not that's okay? How does that work?
So the short answer is no, not really. And a big part of that is actually just the limitations of what we can do with smart contracts. I think especially on ETH-L1, where some of these more complex transactions get very expensive. So all of our loans today have been fixed term, fixed duration loans. So 180 days, 8% for $30 million type of thing. There is not the option to refinance that. We're working on some other products that are more variable and work with the interest rate curve or a utilization curve to set the rates. But today, at least, everything has been fixed.
Is that something that you would think about in the future if there is a use case for it? I know that sounds like from at least a tech perspective, there's some complexity there, but is that something that you would think about?
We'll think about absolutely anything. If you got a good use case, throw it out.
Okay. All right. No, that makes sense. Okay. And then the other thing I want to talk about is market expansion. So obviously, as Blue Jay, we care a lot about not just obviously the growth of crypto overall as an ecosystem, but specifically for use cases, end users in Asia Pacific. So how have you guys thought about your own market expansion? Currently, are most of the suppliers to borrowers Western, maybe US, European markets? And are you thinking about how that would look like if you were to expand to Asia or perhaps LATAM or Africa as well as those opportunities arise?
We would love to work with managers that are active in any of those regions. I think just from the TrueFi perspective, we're really trying to draw this line where what we're working on with the protocol is that this is, at some point in the future, the best infrastructure for lending, full stop. And so if a manager in APAC or Africa or Latin America wants to use it, that's great. We have done a set of loans with a Mexican fintech company called Delta.ai. And as a result of that, we've gotten a lot of Latin American inbound. We've also gotten a lot of Southeast Asian inbound. And so I think just based off of the very limited stuff I've seen, I wouldn't be surprised if we had more kind of LATAM, Southeast Asia type of borrowers in the future.
Gotcha. But right now, from the sounds of it, you're mostly looking for the inbound portfolio managers coming to you guys right now, versus active BD in specific markets at the moment.
Yes. So the short answer is yes, right? Inbound is just always easier. When we do outbound, though, it doesn't tend to be geography concerned, though. Like that has not really been a focus of our BD so far, like Africa versus Asia versus Latin or anything like that.
Gotcha. And the only reason why I bring that up is because if you, for example, were to look at fintech as a vertical, it is actually extremely regionalized, right? Because it's quite difficult for, let's say, Plaid, like a US open banking API player, to really have the relationship with the regulators, with the different institutions in APAC to be able to expand. So that's the only reason why I bring it up, and that some of the more real world asset verticals, there are global players, but they tend to start getting a bit more regionalized.
Yep, makes complete sense. And like I said, so we had done this one set of loans with Delt.ai in Mexico City. And as a result of that, we have definitely gotten a lot of LATAM inbound. And then there's a lot of very exciting companies in that region, which is obviously a very big region, but pretty broadly.
Awesome.
Okay, on that note, with regards to how you guys are expanding, what maybe instead of by region, what other verticals are you guys considering?
I guess at the highest level, I touched on this a bit, so cut me off if I'm being repetitive, but we're trying to balance between, really we're trying to focus on what our lenders want. And our lenders are seeking, in general, double-digit returns, 10% plus, pretty liquid in general, so not super long duration stuff, and underlying loans that they can get their head around. And so that does limit us a bit based off of everything we've discussed here. Fintech outside of the US, early stage fintech outside of the US tends to be an interesting kind of vertical that hits that sweet spot. Based on what some of our other lenders, like maybe MakerDAO, for example, where we're trying to get a partnership going, are interested in, we're looking at much more traditional, lower risk stuff. So whether that's banks or kind of regional banks, so on and so forth. But yeah, really just trying to work backwards from our lenders. So hopefully I'll have something better to point to in a couple months.
Okay. And also, I was reading through, and you guys did say that currently you guys are providing it to institutions and hopefully in the future individuals as well. Will there ever be a day where individuals are able to create their own lending pools in TrueFi?
So I would say, so we're actually not providing to individuals directly today. And I don't really see a future where we would lend to individuals directly. We're very happy to work with businesses that go and then lend on to individuals, but I don't actually think it's very efficient for individuals to be borrowing small amounts from a protocol like TrueFi. Both if you're borrowing $500 or $1,000 from us, gas costs are prohibitively expensive, or they can be at least. And then two, the underwriting of that is really not in the wheelhouse of kind of the managers we've spoken to so far. They tend to either be lending on to institutions themselves, like a credit fund, or they have some off-chain data analytics, ML type process for how they underwrite consumers. But I don't think it's something we'd be doing directly.
Okay. And if you don't mind, we talk about a bit of what you did earlier in Trust Token, where I remember you guys were building out non-USD stablecoins, such as even the Hong Kong dollar. Back then, what informed you guys to launch stablecoins in other currencies? And where do you see them going?
So I would say that when we looked at that at the time, basically we had the banking relationships where we could launch those currencies pretty trivially. And so we did. I think just at a high level, the market for non-USD stablecoins has been challenging so far. And I've talked to Sherry about this in the past as well, but it's been a tough market to date. I had actually just been a small investor in a company that was trying to do something with this like a year or two ago. It's challenging to get adoption for some of those non-USD currencies. Obviously, you see Circle now taking an attempt with the Euro stablecoin. I actually just took a look at that today. Current market cap is about 1.5 million with 137 holders, so very much early days. But I've got some battle scars. I'm trying to work on non-USD currencies.
Okay. And actually, that's more or less my questions for tonight. If any of you have any questions, kindly just request to speak. And it can be to Sherry or Ryan. Just anything with regards to TrueFi or Blue Jay. And give you guys a minute. Go on, Ryan.
Yeah, maybe as we're waiting for questions to come up, I'll just mention one more thing on non-USD stablecoins, which is it's not that the use case is not there. It's just that to date, like, it hasn't materialized. And so I think one of the things is figuring out what are the one or two very important use cases for HKD or GBP or even euros. Is it an institutional thing where people want to use it for commercial trade? Is it an on and off ramp type of thing where people want to swap into their native currency as a crypto, whatever that might be, but really defining that use case and building to that.
Yeah, to add to that point, that's why we're doing what we're doing with BlueJ and Asia stablecoins. If somebody has done it like super properly and has dominated in terms of liquidity, then we don't really need to do our jobs here. But what we believe here is that you have to be, as you said, very concentrated about the type of use cases that you want to do. Like, one thing that can be challenging with the stablecoin is that you can do any and every type of use case out there. It's a medium exchange, right? So if you pepper yourself across every single chain, every single DEX, try to target all types of user segments, that's where you're not going to really get anywhere. And what we want to do, and our mission really, is to identify what are some of those burning use cases today, specific to what we see with users or businesses in Asia, and how do we actually use that as like this underlying monetary layer where we can then connect people building protocols to end users that may want access to better financial rails or access to credit that they couldn't have gotten otherwise. And so that's hopefully, a bet that plays out. That's why we're doing what we're doing. But it does require, as you said, a concentration on specific bets that we think will play out over the next couple of years.
Godspeed. I think the space will be a lot more exciting if we have those non-USD currencies as well. All right, audience. Any great questions?
They seem shy. I'm an introvert as well, so if any of you have any questions, if you want, you can just message the account as well. If not, just get up some confidence and just ask your question. If not, that would be it. We'll give them about maybe another minute. In the meantime, if you guys are curious about what TrueFi is, and we actually did an article on TrueFi just yesterday, so you guys can check that out. And if not, you can also re-listen to the spaces for those who came on much later. Hey Ryan, curious, what time is it at your place?
So I am in Poland at the moment, and it is just about 4 o'clock.
Oh, 4 p.m. Okay, that's nice. I guess it's dinner soon. For us, it's 10 p.m. almost. Yeah, it's more or less nighttime.
Wow, thanks for staying up so late.
No, we actually have our spaces at this time most of the time, and we found the most engagement at this hour because I guess folks kind of dial in like post work or post dinner, and why not listen to someone talk about real world assets during this time?
Can't beat that. Hopefully, it's putting people to sleep. So
no, not at all. So Ryan, what are you doing in Poland? Out of curiosity, I feel like you're just everywhere all at once.
Yeah. Unfortunately, I do travel a lot, but actually we have most of our people based in Poland.
Oh.
Our engineering team and a lot of our folks are based in Poland. So I'm actually at our IRL office at the moment. And,
okay, gotcha.
Actually, just as I was getting on this space, I was told that someone in the office might have COVID.
Okay.
We'll see how that goes. Yeah, I gotta get it after I hang up here.
Okay, stay safe out there.
We'll do.
No, cool. Well, let us know if you're ever in Asia or around Singapore. Always happy to meet in person.
Of course, I love that. And obviously, we have met in person in the past, so definitely familiar with BlueJ and excited by what the team's doing.
For sure. Awesome. Any other questions from the audience, from Anthony? Ryan, any questions for us?
No, guys, this was a blast. Thank you so much for having me on.
Yeah, thanks for your time. Yeah, and for the rest of you, just kindly check out TrueFi. Yeah, check out their account. Check out Ryan. He runs his own blog as well. Might as well show that. And we also did an article on them. So if you're interested in institutional borrowing on chain and on-chain credit scoring, you can check that out. And that's about it for today. Ryan, enjoy your soon-to-be dinner. And for the rest of us, rest
Have a great
soon.
night.